Checking in on shares of Apple and Amazon at the market open here, seeing shares of both companies moving to the downside, falling amid tariff and consumer concerns. But our next analyst says Amazon could be a defensive play. Joining us now, we've got Laura Martin, Needham Company's senior media and internet analyst. Laura, great to have you. I do want to start on Apple. You've got a buy rating and a $225 per share price target here. That almost $1 billion hit for Apple, though, in just one quarter off the back of these potential tariff implementations here. Can Apple really survive these tariffs in the short term?
So one of the things it said yesterday was that almost all of their U.S. demand will be met by India and Vietnam starting next quarter. So iPhone will be coming out of India, and Vietnam will be doing iPads and wearables and Macs. So, and then they're going to spend $500 billion they've committed to Donald Trump over the next 4 years to bring a lot of that production into the U.S. So I think they're trying to pivot away. And then China will meet the rest of world needs where there isn't a tariff problem.
And so this business, most of it, half of it is still essentially the iPhone here. And so ultimately, what are we seeing them do? What did you hear that sticks out on what they may need to do with pricing in this interim period of time where we know the consumer and the sentiment has wavered?
Right. I think they're going to need to take margin pressure. I think you're going to see their earnings per share fall because I think it's better for them to maintain their installed base by cutting price and driving unit sales during this period of tariffs. So I expect Apple to eat some or all of the tariff increases and then let the extra costs fall to the bottom line. But on the consumer side, I think they'd be smart to keep the prices steady.
What is an acceptable range for margin pressure that you would be anticipating?
Well, they said it was going to cost them an extra $900 billion in the June quarter, and I expect all of that to, and they took it in their guidance to hit the EPS line. So basically, they basically told you they're going to eat the entire extra cost and not raise price.
And I heard you talking about efforts to move production and supply chains over to the likes of India and Vietnam, but that's obviously something that Apple had already been iterating on since Trump's first time in office and the implementation of these tariffs. Can moving production out of China really be any kind of solid buffer for the company and therefore for investors in the short term?
So, I mean, there's two negatives in China. You saw that the revenue coming out of China's iPhone sales in China was down 2% after being down 11%. That's really hard for Apple to do anything about because there's a sort of nationalistic, rise of nationalistic feeling in China. And so they're not buying American specifically, and Apple's getting hurt by that. So you can't really fix that if you're Apple. But in terms of, they say they're going to double the manufacturing in India this year, which then allows them to have all the US iPhones coming from India, which has a lower tariff than China. And China iPhones will just feed the rest of the world. Because remember, like iPhone sales in America are like 20% of their total. So India can handle 20% of total iPhone sales.
And so that's kind of a kind of two-way punch here from what we've been monitoring coming into the start of this year, both on the nationalistic sentiment for purchasers and consumers in the greater China region for Apple, and then additionally what IDC was anticipating in the growth of the worldwide smartphone market led by Android growth, not iOS. So what is the kind of longer-term ramification that you're measuring Apple up against in some of their efforts to retain the market share that they've been able to successfully build up in that region?
Right. So I think the most important thing is Apple needs to give like holders of iPhones reasons to upgrade or to trade in because their price point's pretty high now. So if you had Apple Intelligence that was doing a lot of really interesting new innovations, I think like consumers would be more likely to trade in their iPhone for the new one because they would want the new functionality. And the problem really is Apple has been very slow at innovation on a consumer-facing innovation. So to me, this is sort of self-harm. They need to do more innovative things in a consumer-facing way that get consumers to want to upgrade the iPhone. And every quarter they come out and they say, oh, we have a new color. Well, you know, a new color, since all of us use an iPhone case, doesn't really drive iPhone sales.
Yeah, no, you're right. And I'm still on the 12 Pro Max, so maybe I don't have much to really offer here to this conversation because I need to upgrade myself. But perhaps I am one of those people that needs to help contribute and do my part for the next super cycle. We'll leave that up to, how long this one lasts. But at the end of the day, Laura, we're going into a weekend where we're going to be hearing from Warren Buffett, who had famously trimmed some of their position for Berkshire Hathaway in Apple. What should investors be doing with Apple shares right now, going into what we might hear from the Oracle of Omaha and coming off of these earnings?
Right, so we have a buy here on Apple. We think it is a great place to hide if you, think generative AI hype is too much, because if you look at the other big tech names, they are spending almost $100 billion each, round numbers, between like 75 and 100 billion on Gen AI. So if you are really worried about Gen AI and the hype and the timing of the returns on that capital, Apple is a great place to hide, because they just announced that they're going to buy in another $100 billion of their shares. So they're shrinking their capitalization. They're in the market supporting their own stock price, and they're increasing the dividend. So if you want a place to hide and you sort of think the Gen AI is overhyped, this is the big tech name for you.
I want to switch gears a bit and talk about Amazon. You really perked me up this morning when I got your note, and the headline was, "Is Amazon defensive?" Laura, walk me through your bull case for this name.
Oh, that was so interesting. I thought that was the most interesting thing coming out of the call last night. So the CEO here, Andy Jassy, said, look, what people forget about Amazon is Amazon's sellers are Chinese sellers. He says people we compete against typically they buy from Chinese sellers, they mark it up, and then they compete against us. So his point was, look, if our Chinese sellers are raising price to cover new tariffs, we still have the lowest price point, because everyone else has another layer on top of that Chinese seller that they have to make more money from. There's an extra margin built in.
Yeah.
So I thought that was really interesting. And then the other thing they said that was defensive, they were arguing they were defensive, which I just never heard before. They also said another reason that we're sort of defensive is something like 25% of their total sales are Amazon basics. And basics are exactly where consumers go. It's like a white label idea. When they're under pressure, to save money. And then they said trust. When uncertainty rises, people go to suppliers they trust, and they trust Amazon, because you don't like something, you just return it, and Amazon gives you the money, sort of no questions asked. So they said they typically gain share in economic weakness and economic downturns.
Laura, thanks so much for taking the time. We're tracking Amazon shares throughout the rest of the day. We know you will be as well. Good to see you.